All right, Trav. Well, thanks for coming in. Obviously, this is going to be a fun time. We got an hour of your time today. So let's just start off with, for those who may not know you, can you give us a quick snapshot of who you are, what's your role, and what does that look like today?
Travis Goltz, branch manager at Granite Bank, 23 years now. I was a realtor before that, right in college and out of college, and had kids and went, oh, this doesn't work.
Yeah.
So the mortgage thing fit for me a lot more. I still was able to stay involved with houses and that kind of stuff, and it really worked well with the flexibility with kids and sports and all the different things that go with it. You've kind of had that a little bit where I did the same thing?
Yeah, I was back in around 2000 is when I was involved in the mortgage industry. So a little bit of mortgage, some real estate stuff as far as, buying for investment property stuff. But yeah, we can kind of get into my journey a little later. But I'm definitely excited to hear more on the current state of the market. It seems like it's slowed down a little bit, but I'd be curious to see, because the mortgage industry from when I was in it has changed so much
dramatically.
So if I were to try to step into it now, I probably wouldn't know, where to start.
Funny, I had a conversation with a borrower yesterday that used to run 2 mortgage companies in California.
Yeah.
And he's like, yeah, I know all this stuff. And I'm like, and I start saying things and he's like, oh, maybe I don't.
Yeah.
It's so different than what it was. And it's hard to have stayed in it.
Yeah.
And watch those changes along the ways too, because there's so many different aspects of what we used to do to what we do now.
Yeah.
And how it's night and day.
Yeah.
It's so different. And it was so easy then, right?
Yeah.
Everything was so easy and everybody qualified for a loan, and it was like you walked in as a first time home buyer, you didn't need any money.
Yeah.
You walked in the door, you said, oh, I grabbed your wrist and see if there was a pulse, right?
Yeah.
That's it. Yeah, that's kind of what it was.
Yeah,
it was. I mean, back in that time, I would tell people it as sad as it was almost easier to qualify for a mortgage than a car.
It was.
Which I mean the NINA and the no income, no assets. I mean, stated income loans, and then obviously you had the subprime, which kind of took the whole thing down because they were just. Unfortunately, people were just spreading themselves too thin, and they were using their house as an ATM machine. They were every sometimes it'd be every 6 months to a year. I'd have clients call me back 6 months. Can you do it again? Looks like rates have came down, and they racked their credit cards back up, and it was a refinance to pay the credit cards back off, and it was sad. I mean, I almost felt bad. Honestly, I felt morally bad doing it at that point.
Yeah.
It's like, how can I teach these people a better financial path to stop the madness of this? Because every time they do that, they're restarting their amortization schedule. It's starting all over again. So all that money was, just to start all over again. Yeah. So then I eventually got into a program that helped teach them how to accelerate their amortization schedule by basically using a line of credit, and they would pay everything on that line of credit, and they would pay it off at the end of the month.
Yep.
And that tool was able to free up that extra discretionary income where they were allowed to. It allowed them to be able to, pay, even one extra monthly payment per year. I think it is.
Yeah.
It cuts off I want to say 7.5 years. I don't remember the exact number, but it's a lot.
It's approximate 5 to 7 years.
Yeah, 5 to 7 years. So it can make a big difference. Just those little things. If you can teach people how to do that, and now they've got they're coming out with 50-year mortgages now. I mean,
maybe
sounds like
maybe
it's on the okay.
I know they did 40 before. That didn't work.
Okay.
So I mean, I guess the concept is try to stretch it out a little bit longer to hold the price off a little bit to make it affordable for more of a first-time home buyer.
Yeah.
What does that do for you in the future? Well, the average person lasts in a house 5 to 7 years. So does it really matter?
Yeah.
It depends on how much equity that's built in that time frame to where when you sell the house, is there any room? Can you pay the agent? Can you pay your costs?
Yep.
Yeah.
To get into the next house? Are you in the same boat as you were before?
Yep.
Those are some of the things that come across my mind that
it's really telling of our times that we're in right now.
Yeah.
That the younger generation, like my son, here sitting here, that, they're in a position where they can't even afford a house unless they go into a 50-year mortgage.
No,
it's just sad times that way.
It is.
My
nephew's buying a house in Colorado, first time home buyer, $500,000 house.
Yeah.
That's normal.
Yeah, that's like the average. What's the average? Do you know the average across the United States? I want to say
every state is so different, but there, $500,000 is a 2-bedroom, 1-bath, like 1,400 square foot house.
Yeah,
that's not new.
Right.
Yep.
It needs work.
Yeah.
So you look at that and you look at what a payment is on that.
Yeah.
Taxes, insurance, mortgage insurance, because you're not putting 20% down.
No.
You're close to $4,000 a month.
Yeah, $4,000 a month,
which is crazy.
Yeah,
like I know that would be a lot for me,
right?
For sure.
I know.
Like if I'm not making at minimum 100 to 150 grand, like there's just no wiggle room there,
right?
Well, there's no wiggle room if something happens to the house, even.
Yeah,
you got to look at what you're you got to be able to. What do you got to be making to qualify for that? $100,000 a year?
Oh, more than that.
Yeah.
It depends on what your debts are too, right?
Right.
Yeah.
If you have any payments, you have a car payment.
Right.
The average car payment's $750.
Yeah.
Mm-hmm.
So throw that in the mix of what it is, and then everything else that goes with it. Plus, you don't look at insurance. You don't look at all the other aspects of what it costs for utilities and everything else. It's a lot.
Yeah.
And everything isn't cheap. So it's like you look at that aspect of it and go, homeownership, we see it as, we know that in the future, it is one of the best investments you can have.
Yep.
Yeah.
But how do you get there?
Exactly.
How do you start?
Exactly.
If you don't have a family member that goes, hey, here's 20% or here's 50 grand to start
or
out.
even co-signing for that matter.
Yeah.
That co-signing thing is fun too.
Yeah.
Yeah.
Because there's a lot of aspects that run that wrong too. So there's just, I don't know. That's probably a whole nother topic of another day with first-time home buyers and how hard it is for them. But they have to realize that there's a long-term goal with that.
Yep.
That when you're our age, you see that aspect of it and go, that's part of my retirement.
Mm-hmm. Yeah.
Or if I'm going to move from where I'm at, I'm going to go buy a house cash because I've had the real estate experience and had the houses over the years and didn't do the refinance every 6 months.
Yep.
I used to watch loan officers do that to their family.
Yeah. Sad.
It really was.
Yeah.
So they had nothing, right? And so the crash was inevitable because of the fact that there was that, stated income was it was a good tool for self-employed borrowers.
Mm-hmm. Yeah.
Because who wants to pay full in taxes, right? There's a reason there's tax laws that let you write things off when you're self-employed.
Right.
But it affects you when you're
go to qualify.
Right. At least now that's coming back with the stated income stuff or bank statement stuff. But you have to put 20-25% down, which is different because when we were there, first-time homebuyer would come in self-employed, let's just say, you're coming in or not. It didn't matter. That was the problem.
Yeah.
And then you didn't have to put any money down. So if something happened, you're like, well, I paid rent for 2 years.
Yeah.
I get nothing out of it.
Yeah.
You would think that I understand it's ever changing, like as far as like the qualifications and the underwriting as far as what they qualify. But you'd think for a self-employed, because what did make sense for me back then was bank statements.
Yeah.
If you can provide and show that underwriter that you're qualified and you have enough income coming in to support that loan, that should make sense because as self-employed, it's a big hurdle. I mean, it's been a hurdle for me, you know? I remember, coming from self-employed, I ended up taking a job I didn't want to take just because I knew that in order for me to qualify for my house, I had to have that income because my self-employed income there was nothing available at that point because everything that I had came from loans that we were doing that were stated at, I mean, those were completely gone. Yeah. So they went back to the hard look on everything, which I understand, why they had to do that, but there should be a little bit more for a self-employed. Is there any more programs like that now?
Bank Statement's a really big.
So that is, now. And when did that come out again?
I bet it's been 5 to probably 7 years ago.
Did they just take like the average over the last 2 years?
They take out a certain percentage for different different things that are not income wise, and they analyze the bank statement itself, take 12 months or 24 months, average what that is, and then take 50% of that.
Yeah.
Right.
Yep.
Just so you're under that DTI
Got it.
calculation.
What year did you say? What year did you say you got in again? I can't remember. You said earlier. I didn't catch it. Sorry.
I don't remember because I switched and I did both real estate and mortgages at the same time. I don't remember when I went full time just mortgages, but it would be 2001.
Okay, 2001. So that was around the same time that I was in then.
Yep.
Okay. And you were able to hurdle the 2008. What did that look like for you? Did you end up?
That was horrible.
Yeah.
Yeah.
Were you involved in any like real estate rentals or anything like that yourself? Or
I had rentals. Yep.
Okay.
5 or 6.
Yeah. Were you able to hold on to them at that point?
I sold them for nothing.
Okay.
Yeah.
I went through the same thing.
Yeah. I mean, had a lot of equity in them, right?
Yeah.
Was cash flowing just fine. That all happened. And if I wasn't able to offset, because some of the part of investing in real estate is putting your own money into it, right?
Yeah.
Because you see what's going to happen in the future. You know that even if it's a little bit of a loss each month, A, you can write that off.
Yep.
And B, you see the appreciation that you're getting in that property. But when your property drops 40, 50%,
Yeah.
and you're having to pay in money, and by the way, we're still in this business not making any money.
Right.
Yeah.
Exactly.
That's hard.
Most definitely. Yeah.
So one more question for you, and then I'll let Boston jump in. I've got
We can talk. I know.
We can talk for hours. This is my wheelhouse. But, so going through 2008 and the current state of where we're at now, over the last 2 years, I thought for sure that we're going to hit a ceiling, and there's going to be some sort of a bubble where things are going to come back to normal. Because when the average price for a home, I would guess, and we can do the data research on this, but I would guess it's got to be $350,000 if you were to take the average across the whole United States.
Probably.
Of all the highs and the lows of different states.
Yep.
That
might even be low.
That might even be low. You're right. It's probably closer to 400, to be honest.
Yep.
Where do you think we are? Do you think it's going to just keep going up? Because I have a little bit of a different take. I've changed my take.
Let me grab my crystal ball quick. And
yeah, it's hard to know for sure. But what would be your? And I'll tell you where I think things are going.
My opinion is, and I remember before. See, everybody says 08, but it was really 07, August of 07.
Yeah,
is when
it started.
Things really changed.
2008 is when the.
Right, everybody else felt it.
The fire, things were burnt up by that point. Yeah.
Yes,
you're right.
When 2007, was closing like $5 or $6 million in 1 month in loans, and not one of them funded because everybody closed.
Yeah.
Everybody shut their doors. The implodometer was a big thing back then. It showed us every company that was going out of business as we went along. We kind of watched our demise in front of us on a computer screen.
Yeah.
Wild, yeah.
I think the biggest difference in what now and what then is we've got an economy that who knows. One person will tell you it's strong. One person will tell you it's bad. Who knows what it really is. It's all kind of a farce to me. Like everybody can push it up or push it down however they want to. But I think people have put money into houses. Some of the first-time home buyers have gotten grants or gotten different down payment assistance pieces. But in general, people have put money down. They have equity in houses. They qualified for their real jobs. There isn't a lot of ARMs that are sold. So I think a lot of that played a big, big role in that part of it where nobody really made the money that they needed to qualify for a lot of the loans that were out there.
Yeah.
And that's a big factor. They didn't put a lot of money down. I remember there was deals that were a fourplex investment property, and you could do an 80-20, 80% first, 20, nothing down.
Yeah.
And you showed zero income.
Yeah.
You went by the income of the property, but the property was empty and needed to be fixed up. It didn't matter.
Yeah.
So a lot of those loans were out there, and I'm sure there's still a lot of loans that are weird too, but nothing like that. Nothing to that extent. So I think as long as we balance it and we see the mistakes that were made back then and we keep, things balanced a little bit, like, hey, rates going down a little bit, keeping them in that 5% range.
Yep.
I don't think the 3-4% range is reality unless we have another pandemic.
Sure.
But I think that 5% range is going to give people comfort to come out of their 3 or 4% rate and buy something else because their family's growing or they're moving to different areas. And it's not such a big change to where it was where we're almost close to 8%.
Right.
That's a big difference.
Yeah.
And in 2007, the prices were different than they are now.
Yeah.
Because it was pretty high interest rate back then too. It wasn't cheap then. But everybody was on an ARM.
Right.
That adjusted.
Yeah.
That was a 2-year ARM with a 3-year prepayment penalty.
Yeah.
And then all of a sudden you didn't have the money to refinance it, and you all of a sudden it jumped up that. It was just a perfect storm.
Everyone got stuck. Yeah.
So to answer your question, I think there's going to be some issues if you look at a lot of people's credit that you look at, how 5 years ago credit card debt was minimal.
Yeah.
In the last 2 to 3 years, that credit card debt has grown.
Yeah.
In my eyes, for what I see.
Yeah.
I'm sure that others
has.
can throw in there what it is, but I think there'll be some more foreclosures. There'll be some more hard times with some of it.
Yeah.
But I don't think that we'll see that aspect of it. Maybe on different levels in different financial sectors we'll have problems.
Yeah.
But I don't see it as much on the housing side.
Yeah, I would agree with you. I think the biggest thing that I would say to just re-emphasize on what you had just discussed is the fact that they've got a lot more skin in the game. They're having to actually put a substantial amount of money down to qualify, where they're not coming in for, very little money, where it's easy for them to walk away, in a foreclosure kind of a setting. At one point, I thought that the housing market would have a big correction, but I now believe that for those that can afford to get in, it's probably just going to keep moving up at this point. One of the things that I gave Boston for advice, and I would give advice to anybody that's listening on the podcast that's in that younger generation, rather than going and just buying a single family home and stretching yourself and making yourself house poor, maybe look at some alternative options. Maybe look at like a duplex or a fourplex. If you could qualify for something like that, where you're living in the duplex, I believe there are loans where they're more attractive financing if you occupy the actual residence.
Oh, absolutely.
Too, as well.
Primary residence, so that you can use that other side as income too.
Yeah, so now it's going to offset and make it a lot more affordable. And you're building equity. You're not house poor. Yeah, it might not be your dream house, but you got to take your expectations back a little bit.
What we need to do is we need to find some land and start building some more of them, because that would be a huge factor for like your age, like my son's age, to go in and you don't have a family yet. You don't really care.
Exactly.
Yeah. Get into it, and who cares if you have a neighbor?
Yeah.
Right?
Exactly.
You can pick them.
Exactly.
Yeah. Right.
Yeah. Exactly.
So you agree with that, obviously.
Oh, 100%.
And that turns it more into an investment. Obviously a house is an investment, but when there's no cash flow coming back to you, it's technically a liability at that point. So it turns it into, a system where you get that free living, and instead of just paying, maybe like an apartment where you're just consistently paying rent, at least you're taking the money that you're getting from the other unit, right? Putting that into yours, and now, it is an actual investment, because you are making money on that property.
Yeah, in some senses it pays for your whole mortgage.
Exactly.
Yeah. And if you could do that and take that money and pay down that mortgage faster, right?
Exactly.
Actually pay a rent to yourself.
Exactly.
And use that as a rental piece to it.
Because then you don't have cash flow coming out, right?
It makes a lot of sense.
A
lot of people, they have a job and then they're just paying towards their house. Well, yes, when you go to sell, you will get most of that money back. But the problem with that is you're not building then, right? You're just, that money's just coming straight out of your account.
Yep.
And, it's not like a traditional investment where you'll get paid monthly or yearly, right?
Yeah.
I think it's the biggest misconception with younger, actually anybody, like to go live in a duplex or a triplex or a fourplex. The amount of money, maybe they're a little bit more expensive, but you don't have to put down. If you're going to live there, who cares if it's
especially
a couple
for
years?
first-time home buyers too. You know?
Right. Who cares if you're going to live there for a couple of years?
Yep.
Oh, I don't want to do a duplex. I don't want to. You're living in an apartment right now.
Yeah.
You then own this. You have somebody that's next to you that you chose, whatever it is, and you're building equity in that house.
Exactly.
And in 2 years, if your life changes, cool.
Yeah.
Yep.
Sell
Great.
it, move on, or keep it.
Rent
There
it
you
out,
go.
move on to the next.
Yeah, my opinion is keep it.
There you
Yeah.
go.
Everybody else is like, well, after 2 years, you can sell it and not pay any capital gains. I'm like, but all the other gains that you can get out of tax purposes for that investment property are so much more.
Yeah.
Well, it sets them up too. It sets them up to have that asset to be able to have a fallback that's constant. If something changes in their job and they do it right and they hold on to that property and if they figure out ways on how to even affect that amortization schedule, like I talked about earlier, with that extra discretionary income and not living beyond their means, taking that extra money and throwing it at an asset like that, where eventually you pay it off early. Now, life changes or things change. You have that income coming in that can help. As a fallback.
True. Going back to your era, younger, you remember high school.
Yep.
Okay. We're close. We might
Not that
remember
far
it.
yet.
Right.
Not that far yet.
Right.
Yeah.
So we've gone in and done some credit classes because most parents that aren't in the business or don't really understand it don't teach their kids anything. They come out and they're like, hey, I'm a first-time home buyer. I had a credit card. I forgot to pay it.
Yeah.
I don't understand what the big deal is. Well, it's a big deal because it affects you not only on that credit card and having to pay it back, your car loans. I look at people now, they're getting car loans, and you can go to a credit union, a bank, and whatever, and find a 4 or 5% interest rate.
Yeah.
They're paying 18, 19% on a car loan.
Yeah.
Their payments it's a used car, so they're upside down, by the way, when they're done.
Yeah.
Yeah.
They can't get out of it because they're stuck.
Yeah.
And those things are so easily fixed.
Exactly.
To have the conversation. And when you're young, if you make one mistake, it's super easy to fix it. Is that if you let it go,
Yeah.
that credit just gets worse and worse and worse, and it costs you so much more money.
Yeah.
Yep.
It's sad.
That's the biggest thing that I've learned just in high school, right? You don't learn stuff about financials.
You
right?
don't care.
Which it's like, number one, you don't care. You're not thinking about it. Number two, that's the biggest thing missing. But I guess to the same point, they don't want liabilities as far as, if I teach you this and you go do this and now we're responsible, right? So I understand that, but that was the biggest thing for me in high school is just learning how to navigate, my finances and what I'm doing, how I'm going about things, how I'm spending my money, how I'm saving my money, right? And a lot of people, I was very fortunate to have him because he had really pushed it on me, like invest, and got me into, Rich Dad Poor Dad, which is an awesome book. I highly recommend anybody out there to read that.
Oh, yeah.
But yeah, I mean, it's all about what kind of your experiences you go through, right? So just getting something out there, I think would be really beneficial for those kids just to at least look at, to get brewing in their mind. Investments are very, very important, right? And it's very important to learn early. And
you don't have to be rich to
exactly,
invest.
exactly.
And that's
Slow
the
and steady,
misconception, right?
Yeah.
It's like you don't have to be, but be smart with the things that you have and the abilities that you have to do it with.
Yeah.
And don't spend extra money that you don't have to.
Yep.
Yeah.
And if you just literally just teach your kids just a little bit about credit, put them on a credit card that you have.
Yeah.
Yep.
Early on.
It's going to make their credit so much stronger, and they don't have access to it.
Yep.
If you want to have access to it, cool. That's up to you.
Yep.
But they don't have to have access to it to grow that credit from the base.
Yep.
And the biggest thing about credit to me is it's like a pyramid, right? That pyramid, if you started with a big base, it's going to last millions of years?
Yep.
Yeah.
Right? Just like pyramids do.
Yep.
If you start the other way, it's real easy when that one payment happens and you miss it, or you're 30 days late on that $5 credit card.
Yep.
It can topple and you're done.
Most definitely.
So that's a big piece to
No, for
the
sure.
aspect of it. And parents don't understand it.
Yeah. And sometimes that's the case too, right? When kids are, led the wrong way, well, maybe the parent didn't teach them this or didn't do that.
The parents
right?
don't know.
Exactly.
They don't take the time to learn it, understand it. They just got through life and whatever their mid range credit score, and it was fine for them. But to understand, when we understand and know what you can get and what happens if you have a better credit score and how much less it costs you, it's just mind blowing.
Yeah.
Yeah.
And just if you do get a credit card, make sure to just have it in your
Pay
bank. Don't be buying silly stuff that's, gonna that you really can't afford, that you'll be now making payments to your credit card on.
Yeah.
The sad part about our credit system, and it is kind of sad, that if you don't have credit, you can't buy things.
Yep.
Mm-hmm.
So like a majority of the people out there can't, their ability to go buy a house cash isn't there.
Yep.
Yeah.
So if you don't have the credit, you come into it and you're like, oh, I can't really do this because I have zero credit. So let's create that credit. Let's help you do that.
Yep.
And sometimes it's too late. It's hard.
Yeah.
But when they're young, it's really easy to add that to it and try to figure that out. But the no credit thing is bad too.
Yeah.
But having a credit card, like I tell people, it's like, they're like, yeah, I'll get a credit card and I won't spend anything on it.
Yeah.
Well, for the first couple of years, you have to.
Yeah.
Right.
Unless you have mom or dad or somebody in the family that can add you to their card as an authorized user,
Right.
then you're better.
Then you're building.
Exactly.
Yep.
Because they have 5 or 6, 7, 8, 10 years of history
exactly.
on it that can
Experience,
help.
yeah.
It goes right to you.
Yeah.
And people don't understand that.
Yeah. Yep.
Yeah.
That's what I personally did that for sure.
Yep.
So here's an idea. I really think if you give back to the community and you give back to education and helping people, it pays tenfold.
Oh,
forward.
100%.
So what about possibly doing another podcast just on that series?
100%.
On helping the younger generation, teaching them about money, how to qualify for something like we talked about earlier, duplex or something. Just those basics, because unfortunately, a lot of parents, like you said, sometimes to no fault of their own,
Right.
they're just following whatever their parents struggled. Now they're struggling. They're distracted with life struggles.
Mm-hmm.
They're not teaching their kids, and it's just it's a cycle that won't break.
It won't.
Unless that next generation breaks it.
I met with a couple of younger folks last night that neither one of their parents have ever owned a house.
Yeah.
And they have no idea. The misconception, they met with a couple loan officers before me and they were scared. I literally got there and I'm like, they're like, I'm so nervous. I'm like, what are you nervous about?
Yeah.
Well, I just don't want to be talked to like a kid.
Right.
And they're in their mid-20s.
Yeah.
And I go, well, relax, because
Yeah.
we're not going to have that conversation. This is informative. I want to teach you about what can happen and how you can do this and how you can make this easier.
Yeah.
Right? Because it doesn't have to be that difficult.
Yeah.
You don't have to be afraid of it.
Yeah.
If right now isn't the right time, cool. But let's put a plan together so that next year or the year after can be the right time.
Exactly.
They're like, yeah, we want to get into a house. We don't want to do that. We don't want to start a family until we have our own home.
Yeah.
I go, great. This is a perfect starting point. But a lot of people will turn them off because they'll go online and they'll look for a lender that's not local, that's not a part of what they're doing. And they're like, oh, yep, your credit score is X. It's not great.
Yeah.
And you're just in a starter job. We're just next, because we don't want to work with you to try to figure out the different aspects of what we can do to help you.
Yeah.
We don't want to worry about the future. We want now. It's
Yeah.
all about units now and what we're going to make today.
Yeah.
Not in 6 months, not in a year, not in 2 years. The sad part about it is those loan officers won't be in this business in a year.
Yeah.
Yeah.
Exactly.
Yep.
Yeah.
So, but that doesn't help that couple that's nervous when a guy like me shows up and they're like, I'm like, you don't anything to be nervous about.
Yeah.
I'm going to tell you honest truth and what you can do. I'm not going to say no, maybe not right now, but let's learn. Let's learn this together and figure out what we got to do to make this right.
Yeah.
Yeah.
No, for sure.
So,
I'm sure that's huge. I'm sure you get a lot of younger people that, and I'm sure they appreciate it, when you kind of advise them and put them in the right direction, and that's good.
yeah.
Yeah.
They felt a lot more comfortable afterwards. I hope.
Yeah.
Another question for you. A lot of my close friends coming up in the mortgage industry that I worked alongside when I was in it are now with Granite Bank. I mean, no joke. Close friends of mine.
Yeah.
Brian Palmer and Brandon, that team I know recently made the switch over.
Yeah.
I know Josh McCarthy really well.
Yep.
I'm sure you know all these guys.
Absolutely.
But obviously Josh Boss, I've got
Yep.
a long history with him. It tells me that Granite Bank is doing something different than the rest. So what do you guys have that is different than, because people have a lot of options out there. They have credit unions, they have different banks, they
Yep.
have different. What makes you guys different in terms of Why should someone come to you versus another option?
It's a great question. I think it's culture. I think it's a bunch of people that actually care about what they're doing. Because you remember back when you did this, it was more of probably a machine of churn in, get out loans, and just do the day-to-day in and out.
Yeah.
Especially if you're a broker.
Yeah.
Nothing against brokers.
Right.
But just you don't have that connection.
Yeah.
These guys, a lot of them have all worked together in the past, and especially on the operations side of things, and they get what has to be done, what's good. There isn't a disconnect between operations and sales, which in a lot of businesses there are, and a lot of times in mortgages there is. We're better than you. We don't need you. That kind of thing.
Yeah.
Culture is a big thing. Everybody is like, they try to do things together. They try to figure it out because, like you said, a lot of mortgage companies do a lot of mortgages and they can do stuff. But coming here, dealing with situations, because there's always something on a loan, right? There's always something that comes up. A borrower comes up, something, whatever happens.
Yeah.
The time that's taken with people that are busy every single day, that they jump in and make sure that that's taken care of. Going back to 23 years in this business, you see it can get old.
Yeah.
Right? There's a lot of stress. There's a lot of everything every day. And the burnout rate is probably pretty big.
Yeah.
The biggest piece to it is that you get a little refreshed. We were with a company for 5 years before this and then went to another one for 2. And it was like, I felt beat down.
Yeah.
I felt it was a bigger company. It was a nationwide kind of company. And I literally, and I had been with a lot of them, and I said, I'm done. I'm done with that. I sat down with Brian and literally talked to him, and he's like, I'm not recruiting you, because we've known each other for a long time. He goes, but what are you doing? What's this? And I go, I feel refreshed.
Yeah.
Our conversation was refreshing.
Good.
And that to me was big because it really reflects on every aspect. It wasn't just a recruiting piece.
Yeah.
It was now being here for over a year.
Yeah.
And seeing every aspect. And as a branch manager, bringing other people into it, right? I've got people that have worked with me for 10 plus years that come here and are like, oh my gosh, this is so refreshing. I'm so excited to be here.
Yeah.
And because they get to work with people that put a smile on every day, and it's not just fake.
Yeah.
It's real. They have a passion.
Yep.
You look at Hannah. I know that Hannah she's been around for a long time, but she's refreshing, like as an HR, like everything. She's like wears all the hats. I mean, for everything. And you call her and she's always available. Because I know there's 100 other people calling her to try to figure things out, but she's there.
Yeah.
You guys know Josh.
That's huge.
Josh really well.
That's
like
huge.
to call Josh. Josh is like inundated by people all the time too. He'll be like, hey, give me 10 minutes. I'll call you. And we figure it out.
Yep.
Yeah.
There's a solution to everything. Maybe it's not a good solution. Maybe we can't do the loan, but it's a conversation and we figure out the why.
Yeah.
And I can explain that as a salesperson. If you can't explain your problems and it's just like out there, you did whatever. But to come back to it, long explanation, it's culture. It's everybody is, and that's a weird word to use sometimes because you don't understand it. But in this business, if you don't have that, you have nothing.
Yeah.
Yeah.
That's a big thing now. Culture, community, people feeling like they're a part of something bigger. It's not just a corporate, where you're just a number and you feel like you've got a team there to support you.
Yeah.
That's got your back.
Yeah, and then it being a bank, right?
Yeah.
I've never wanted to work at a bank.
Yeah.
Not because I'm any disrespect to a bank, but like on the mortgage side, bigger banks, that's in my mind, is bigger bank doesn't really have that knowledge of the one-off mortgage guy.
Yeah.
Because we're not out there doing 200 deals a month.
Exactly.
We're doing 5 to 10.
Yeah.
I want that small feeling
Community
of that
bank feeling.
Right. And when you can go to the guy that runs the bank and ask him a question or figure it out on a different type of loan where it's not like, here's 20% down, 800 credit score. No, this is a resort on Mille Lacs Lake that's dilapidated since the crash in 07, 08.
Yeah.
Yep.
And they're buying it.
Yeah.
How can we do this? The realtor was like, hey, this is a commercial loan.
Yeah.
We're not doing a commercial loan on this. This guy, there's no way.
Right.
We did it as an improved lot.
Yeah.
Because there was septic and water, and we could close it. because you have that aspect of everything.
You find ways to make it make sense and
Yes.
get it done. So underwriters aren't just looking at it as here's our process, here's the way it has to be.
Yeah.
They'll move things and make things work if it's the right loan.
Yeah.
To get things
Yeah.
done.
Yeah.
That's
Strong
huge.
borrower, who cares, right?
Yeah.
If you have a strong borrower that's going to put some money down, or, we can grab some equity out of one of their current houses because they've got some equity in it, take it to put that down on that house or that property that they're buying. It's all encapsulated in one.
Yeah.
Where I don't have to go, hey, ABC Bank or hey, XYZ Bank, can you help me out with this line of credit or this product?
Yeah.
I'm going to refer this to you. Well, bye.
Yeah.
Now everything is right here, right? We have the mortgage sense of the regular mortgages that are going on.
Yeah.
I also put in the portfolio loans that are inside the bank and the HELOCs, the bridge loans, the cash to win, which is another concept that we should talk about on another podcast, but
Yeah.
is such a cool aspect. And because everybody that runs it, forth thinking and figuring out, they've all originated, they've all been a part of mortgage companies, they've all figured out ways that they need to make this work.
Yeah.
It's different.
Yeah.
It just is a different feeling. It's just a different cool aspect of things. And people don't like to think they're on a bandwagon of jumping ship and going to somewhere like that. But once you get here and you figure it out, it's pretty cool.
Yeah. And I think that's the biggest part to any business and to any business success is just the community and who you're working with, who you engage with every day. Because if it's a super hostile environment, nobody's going to be happy. Nobody's going to be performing, So there's that's the biggest piece is being comfortable with who you're around. That way you're comfortable with what you're doing.
Yeah.
Right? And that's
I hope I
huge.
answered your question.
Yeah.
No, you did.
You did.
It was
Maybe
great.
maybe more, but
Yeah. No, it was good. I appreciate it.
Yep.
It gives me a much better, clear view of why I'm seeing all my friends gravitating
Yeah.
over to Granite.
Yeah, it's not because of anything other than they know when you come here, you don't have to worry about, because we were talking about the other day, the attrition or the change in mortgage people is 2 to 3 years.
Yeah.
Every 2 to 3 years, you're making a change. Why? Because the big company changes all the time, and they don't take into effect of like, okay, this loan officer that's doing whatever, 40, 30, 40, 50 loans a year is going to leave now because I'm greedy or I want to change this aspect of the business.
Yeah.
And that's why you leave, right? Because
Right.
rates jump up or something happens on that side of it or your service levels change.
Yeah.
Every day I see when we do meetings every 2 weeks with everybody on the operations side that they're always looking at what the problems are, listening to things because it's never perfect, right? It's not going to be.
Yeah.
But as long as you listen and you try to make moves with it and try to stay with what's happening, that makes all the difference because
Yeah.
you care.
Absolutely. So you've obviously been able to survive this long in an industry that
Yeah.
is pretty. What's the word I'm looking for? Well, it's a tough industry to survive in. There's a lot of other professionals that do what you do. What are you doing to kind of stay ahead of that? Are you doing anything with like social media? Have you gotten involved in that, or is it a lot of word of mouth? What are you doing to put yourself out there?
Both.
Okay.
And you have to do more of the social media now because it's funny how you look at applications from 20 years ago or 15 years ago where you sat down and you met them and you took the application and you wrote it all down and you did all that. Now it's like, hey, here's my application page, go fill it out.
Yeah.
Yeah.
So how do you, in 5 minutes, have a conversation with somebody and basically without telling them, I'm going to know more about you in 5 minutes than you do about yourself.
Yeah.
And you don't even know me.
Yep.
Right?
Yeah.
How do you make them feel comfortable?
Yeah.
How do you do that kind of stuff?
Yeah.
That's really, I don't know, the biggest piece to it is just that comfort level. But I've got a couple of people that I've been introduced to that do some of the AI advertising, and everybody's pushing AI. It's like such a big thing. Obviously having a conversation with you, looking at some different aspects. I've got another guy that does just literally little pop-up ads on different things where we can categorize those and put those and have them pop on people's phones.
Yep.
Cool.
When they're in certain areas or at
Yeah.
certain times.
Yep.
And just things to just keep your name out in front of people, because if you're not in front of them, they forget about you.
Yeah.
And I do this. We all do that. with whatever business that we're going to go buy something in. If we don't hear about it, we're just randomly go to the other place. Oh, I forgot about that. I knew this person doing this. You know,
you gotta be in front of somebody 7 times, or they need to see you or see your name or see your brand 7 times before it actually like clicks in their head.
A year.
So, yeah.
Not ever, but like a year, right?
Yep. To stay relevant, I guess, right?
Yeah.
And it's probably increasing because people's attention span is so small nowadays too, where they're getting hit with so much that you got to be relevant enough to catch their attention and do it within a short time period. Where we're moving on to the next, ad
It's
or
funny.
whatever.
You're having a conversation with your son. I do the same thing with my kids. It's like their mentality of your mentality of like what we look at and how life is completely different. Even though we're standing next to each other, your abilities to, I don't know, social media makes such a bigger impact on you than it does us.
Yeah.
Like we see it, we're a part of it.
Yeah, well, we've grown up in it, right? So, I mean, we've been surrounded in it our whole entire life.
Yeah.
So and
it affects you guys a lot more.
Yeah.
Like we look at it, we're like, nice filter, whatever.
I gotta help this guy cracks me up because he's over here doing this and like doing that, right, with the new technology stuff with like, he just got a new laptop. So I was helping him set it up, and it's just so funny because it's like, it's a second language to me, right? Where I'm just flying around and I know how to do everything. And he's over here like just trying to send something and it takes him 10 minutes. You know what I mean? And I'm like,
it's honestly, it's a catch-22 because a part of it, I like the fact that I don't know it all. And I'm kind of in that stone age because I can find peace where a lot of the younger generation nowadays, I mean, if you look at the apps, look at Facebook, right?
Yeah.
So Facebook came out, you've got friends and there's different aspects to it. And then TikTok comes along and it's swipe, 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 swipe.
Yeah.
It completely changed the attention span of social media.
Yeah.
As a whole.
And then
So,
Facebook ran onto that, right? With the reels and everything else.
It's the next thing. And it's like people's attention span and just be, I bought a place up on a lake and I love to just go slow down. I don't even like to be on the phone. If I could throw this thing in the lake, the phone is what I'm referring to, and social media and everything else that goes with it, I would do it.
Yeah, that shut off is pretty great.
But you have to have a balance, right?
Yep.
If you want to remain in business in today's economy and generation and the new wave of the AI and everything that it's evolving into, you have to adapt.
Yeah.
You have to adapt and do some different things, but there is a balance. And that's where it's like, he has a hard time with looking at me, but I'm just thankful I got young guys like him.
I know.
Because I don't have to know it all.
No.
I just have to know how to delegate.
Yes.
So
that's so true. That's exactly what I was going to say. I'm like, I love doing mortgages. I know it. I sleep and talk about it.
Yeah.
But when it comes to marketing, I go, okay, I'm not good at this.
Yeah.
This isn't my forte. I don't understand it. I have to have somebody else help me do those things because I want to stay up with it. I want to do the things, but I can't mentally put myself okay, I'm going to sit at this computer. I'm going to write these ads. I'm going to do these different things. I'm going to figure out all the different algorithms, the way to bring the leads in, the way to do all the funnels and everything else. None of it makes sense.
Yeah. No.
Yeah.
And it doesn't have to, and that's the benefit. And this podcast isn't about us, but my big thing on why I kind of changed from my previous business that I sold out of, and I was looking at what's next. I kind of wanted to help businesses on a wide scale, like yourself, because we're kind of in that same wheelhouse. I don't claim to be an expert and know it all, but I have the people that do.
Yeah, right.
So as long as I have the people that do. And I've got the ideas to go out there, and I've got a lot of connections like you do from all my years in business. I have a lot of businesses where they just don't know where to start with that next piece of marketing. And if you don't know how to completely do it yourself, and you don't hire a professional that can manage that piece of your business, unfortunately, you're probably not going to be in business, 3, 4, 5 years from now.
No,
because you look at Blockbuster, I give the Blockbuster example that, when Redbox and Netflix came along, there was even some talk of offers for them to come join and be able to be a part of that. And they turned it down. They thought they were invincible.
Yeah.
They were not interested.
Made too much money.
And you don't see Blockbuster anymore.
No,
they
gone.
died because they didn't adapt and they didn't evolve into the changing times. So Yeah, I hope on another podcast we can get into a little bit more on the marketing piece on what we can do for businesses.
Absolutely. But, I think that's a big thing. I mean, I think that's a really important piece to it.
Yeah.
Taking off your other business, like your teaching and coaching, that could be another podcast too, where you talk about like different businesses, like give them advice on the different nuances that we've gone through, that we've seen, that we've understand, and give them that advice to teach them how to, as long as they listen, right?
Yeah,
for sure.
On what not to do, what to do.
Exactly.
And how to keep yourself, like in the mortgage business, it's like everybody's like, oh, I just made so much money. I'm going to go on a vacation, do this. I go, I look at them and just kind of put my head sideways and go, well, cool, good. Mm-hmm. But once you stop focusing on what you're doing, you're losing that. Not saying you shouldn't take vacations and shouldn't take breaks, but the spending the bunch of money and the spending this much, be smart about it. Because if you do it right and you spend it right and you save it, all that stuff comes way better.
That's it. Yeah, that's a nasty spiral you can get caught up in. I've known a couple of friends that, make really good money and have made really good money. And then, they go somewhere or do something and they're stuck in the cycle of going to the club and spending the money. And, I know he's had some stories of that where he kind of did that back in the day as well too. So just keeping your head focused and, your goals right in front of you. And I think that'll help you, stay on the right.
It's a big thing path. At your age, because when we were young and you made a bunch of money, it was easy to spend it. It was easy not to have it.
I mean, it's always easy to spend money, right?
Yeah.
Yeah.
But
it is.
Sure is.
So I have a hard time. Sometimes I overtalk because when I get passionate about a subject that I'm familiar with. So I'm going to let Boston kind of take the floor. I know he had some questions for you.
Absolutely.
So before we run out of time.
I mean, we've been doing good though. We've been doing good.
Fun.
I think we've touched on a lot of stuff that I do want to talk about or did want to talk about, right? But I guess when you imagine the vision of your company in 3 to 5 years from now, what does that look like? With kind of, we were just going off of the technology thing. What do you think your business looks like in 3 to 5 years from now?
So we're kind of a separate entity inside of Granite. So like as a branch, as individual branches, kind of how the mortgage industry kind of works.
Yep.
When we were probably for the last 5 or 6 years, we were up to 24 people in our group.
Yep.
The last 2 years, we dropped down to like 5 to 7.
Yep.
And I kind of realized and looked back at that and said, I really like to originate loans. Mm-hmm. I like to help and I like to teach and like help the different loan officers do like learn and do that kind of stuff. But I also like the balance and being able to originate. When I had 24 people, I didn't have the time.
Yeah.
And that took me out of my realm of who I am and what I want to be, because I really want to be able to sit down with the first time home buyer, with the families, and be creative with a new product that we have or whatever it might be, and get that out there and talk about it and originate those loans.
Yeah.
So having that 5 to 7, maybe 10 people on a team, other originators that are out there, still being able to help them have the questions and do the things they need to do. A lot of it with support with a lot of people here, which is amazing. Mm-hmm. To have that aspect and still being able to originate loans is huge for me.
Yep.
So growing really big is not a big thing for me. More of that middle small group.
Yep. Mm-hmm. Quality.
Yep. And then being able to help them and also being able to originate loans, which where my passion is.
Nice. So what's the single piece of wisdom that you hope someone listening walks away with today from our talks, from you? Kind of give us a rundown of that.
Really, like in any business, I think the biggest thing is care about what you do and care about the people that you work with.
Yep.
I think if you give that, kind of like we talked about, you care about what they're doing, care about helping them and put the effort into that, it's going to come back tenfold for everybody, right?
Yeah.
Not just for you, for them, for everybody around you listening. I think that's really the biggest piece to it, is like understanding. I was going to do a podcast later with another agent, and I said one of the topics I brought up to her was real estate agents that care about their people and not just in it for the commissions.
Yeah.
Right? That's going to come. You're going to make money if you work hard and do that. But you got to care about, like, hey, you're buying this house. They're paying more money out in this house, so you should buy this one.
Yeah.
Mm-hmm.
Or how about listen to what they want, care about their needs and what their desires are with the house, and get them into that house, even if it is a little bit less that you're getting paid, because it's going to go a long ways and
It's the
come
principle,
back.
right?
It really
Yeah.
is. So that's really what, for me, that's a big thing, is just caring about every aspect of the situation. No matter who's there, no matter what's going on, realize that they're there because they're trying to grow, they're trying to learn, they're trying to figure out life. They're trying to make an investment, right?
Yep.
For their first house, or they're trying to learn how to do mortgages, or they're trying to learn in their business, and just give them that piece of advice that you have, the experience that you have, and pass that on. I think that's huge.
And then you feel good about what you're doing too,
Right.
because you know you're helping. You're not in it for just you. You're in it for, who you're working
That's
with.
natural, right? If you
Yeah.
care about them, that
Yep.
natural feeling comes in there, and you just get that.
Exactly.
Hey,
And like you said, I mean, success is inevitable if you put in the time and you're consistent with it, right?
Yeah.
So, less worrying about like, okay, what am I going to get paid on this? How am I going to do this? Just going with the flow, doing what you do best, talking with people, and really caring about what they have to say and what their goal is.
Yep.
I think goes a long way.
You're going to be
in
successful
business.
in however you feel success is,
Yep.
if you do it that way.
Yeah, no, for sure. I couldn't agree more. How about you? I guess I'm going to ask the same question to you real quick, because obviously you're a little bit older, so you can give advice to these people.
Hence the gray hair.
Yeah, right. That's why I got a hat on.
I didn't have gray hair 2 years ago.
Right.
Now it's like all gray.
Yep.
Yeah.
Yeah, well,
Thanks, buddy.
I got
Appreciate
something,
that.
I got something to look forward to too. I
Yeah.
guess, right? But I guess same with you. What's the single piece of wisdom you hope someone listening walks away with today?
I elaborated on it earlier. I think if we can make a difference in the younger generation, helping them learn financial freedom, teach them, the difference between assets and versus liabilities, and show them, help bring that fear barrier down and educate on how they can buy a house and do it the right way, like we talked about earlier, versus a traditional path and maybe doing a duplex where it makes more sense, and it might even put them into a position where they can actually afford it versus stuck in that rent trap. So if we can make a difference in the younger generation, imagine what we can do. So I'm more of at the place, I'm kind of like where you're at, Travis, where I built a lot of big companies. I've built, big teams and things like that. And while I had a lot of fun with that, bigger's not always better. I'd rather have a smaller team that's more of like a family where we're having a lot of fun together. It's not all about money for me these days. It's more about helping people that I care about. Not just my family, but my work family.
Yeah.
Guys like him and friends of his that are coming into our organization and being able to be that mentor where I can instill some of that knowledge that I've gone through.
Yep.
While they're still going to have their own painful lessons, I want to help avoid some of the ones that can be avoided.
Yeah.
So I'm looking forward to more podcasts with you.
Yeah.
Because I think we have a lot to talk about.
Yep.
I think we could do another podcast just on that piece alone.
Well, it could maybe be a little bit of a series, like where we could
Why
teach
not,
credit
right?
and teach
Yeah.
doing things.
I
That
love
maybe
that.
the schools, maybe you could push it towards like the business teachers in schools.
Yeah.
To where they could kind of use that for a class.
Most
Yeah.
definitely.
Exactly.
Most definitely.
I love that.
Yep.
So yeah, that's kind of what I've got. I do want to, let people know where they can find us. So where can they find you, Travis? What's your website? What are some areas where people can go find you if they want to seek you out?
Travis Goltz, if it's just www.travisgoltz.com. I don't have a huge presence. I'm more of an in-person type of feeling. Like, you find me, call me.
Yeah.
I'm a conversator on phone. Don't email
Yeah.
me because, well, you can go ahead and email me, but my biggest thing is having a conversation, talking through this situation and figuring it out.
I love that.
Yeah, because otherwise I lose it.
Yeah.
That's me too.
Yeah,
I'm the
and
same
that's
way.
crazy because that the different generations it's
Yeah.
hard to do that.
I know.
Right.
Yeah, I'm just not like a texter, man. Like, it's very hard to get a hold of me, and I feel bad, like, because I talk to a lot of people, right? I have a lot of friends. I have a lot of people I care about, but I struggle with it. I really do, as far as just getting back to them over like the phone, right?
Yeah.
So I just like say, call me, I'm going to pick up.
Yeah.
But
like
when it
it.
comes to texting me, like,
Yeah, it was funny.
It's-
The
it's
first
very
couple
hard.
times that we talked, you didn't just text me. You called me, left me
Yeah.
a voicemail.
yeah,
Yeah.
yeah.
Never happened.
I know that's unheard of.
Never happened.
But I was in sales for like 6. Yeah.
He's
that's
a
thing
young
now.
guy with an old soul. Maybe I'm rubbing off. on
Yeah,
him.
yeah.
good.
I don't know. And
How about you
Spotify
guys?
just did this thing where like it kind of ages you based off of your music. And I think I got like 59 or something like that. Maybe like 60. It was like 68 or 59 or something. Yeah. So like I listen to older music.
But that's the best music though, right?
Yeah.
Even
like
older than
you,
even older than us. That older music is just like, it's so easy to understand and get, and there's so much like talent.
Yeah.
And nothing's synthesized and nothing's fake. It's all real.
Yeah.
How about you guys? Tell me more.
Yeah, so for us, we started the Level Up Podcast Show. So people can find us at theleveluppodcastshow.com.
Okay.
So we're excited about that. I'm kind of like you, where it took a little bit for me to step out of that box. But now that I'm doing podcasts, it's actually a lot of fun.
Yeah.
I'm really enjoying it.
Yeah, cool.
And like I said, if we can make an impact on just one person, that's worth it alone. So I think we can do a lot more than that. So
cool.
I'm looking forward to making an impact, help showcase, professionals like you that really care and are different than just a mortgage guy that's just out for the money, that you're really trying to make a difference. You mentioned some of the education stuff that you did. I think that's really great. I was going to ask you if you're doing anything as far as
we need to do more.
We need to do more. Mm-hmm. Yeah, take time to do that, and I think it'll pay back tenfold in terms of that's what it's all about, right? You get that feel good of making that impact, and that's really what it's about at the end of the day. Yep. So so we're excited, and then we also started a marketing agency too for those that want help on the AI side. So I'll let you share that, Boston, if you want.
Yeah, man. It's pretty awesome. I mean, we look at different companies and we find out their pain points, and through finding out their pain points, we try to find solutions. So that's as simple as I could put it. But AI is evolving, as you know, and it's going to be the future. So just getting ahead of that curve and not getting left behind, I think it's huge. And yeah, I mean, if anyone out there has a business is weary, like, I don't know what to do, I don't know how to get started, reach out to us, because we'd love to talk to you and figure out more about your business, what you got going on, some obviously successes and some things that aren't succeeding as well. So yeah,
and that site, if they want more information, is levelupaitech.com.
Yep.
So
I think that's my biggest problem that I have in my what I look at myself. I have a really hard time promoting myself.
Yeah.
Like if people are in front of me and I can talk to them, and it's 100%.
Yeah.
But to go out there and promote myself, because I'm not that show off, like kind of flashy person.
I agree. Yeah.
It's hard. That's why it's so important for guys like you doing what you do, because there's a lot of people that are very talented at what they do, but they're not good at that self-promotion.
Yeah, sometimes there's a missing piece to the puzzle.
Really,
right? So
it really is, and that's really the biggest thing that you have to figure out about yourself is you got to get over yourself.
Exactly.
To figure out that you do have a weakness.
Yeah.
And your weakness is what?
Yes.
Right. So like your job is to figure out what that weakness is for that person.
Very true.
Well, you kind of did it for me, because it took, until I was 50 to figure out that I'm not really good at self-promoting.
Yeah.
You asked me, you're like, how do you get a hold of yourself? Just Travis Goltz.
Yeah.
Good.
Yeah. Exactly. I love that. I'm the same way, actually. Like I said, if it wasn't for being good at delegating and taking people around me that have strengths, it's a struggle for me too.
Yeah.
Because we're wired the same way. But that's why I'm excited to jump out of my own box, get out of my, get a little bit more comfortable with doing podcasts and these kind of things.
Yeah.
And like I said, I'm having a lot of fun with it. So
yeah, Ricky Cheath is another guy that's in here that does a lot of podcasts and videos. He's the one that kind of set this room up and or spearheaded it. I don't know how it was, but he sat me down. He's like, let's go do a video. And I go, yeah. And we showed up at a restaurant. We did a video at the restaurant. I'm like, he asked me a question. I'm like, duh.
Yeah.
Like, I don't know what to say. Like, we're looking at each other. I'm like, this is uncomfortable.
Yeah.
And then he went in and helped, because he was like, okay, here's a situation. Like, if I ask you this question, can you answer this?
Yeah.
The question answer kind of thing was way easier than just having a conversation about myself.
Yeah.
I can't do it.
Exactly.
Yeah. So
this
that
is
really helped.
This is comfortable for you.
Absolutely.
Too.
Yep.
Yeah. We'll do it again.
Yeah.
Sweet.
Awesome, guys. I appreciate everybody's
time.
time.
Yeah. Thank you.
Yeah. Thank you so much.
And yours too.
Yeah. Thank you so much. Thank you.